Hi there, welcome back to VT Now. I'm Kanishka Sarkar and you're watching the newsroom. Well, first up, let's put the spotlight on the auto sector, and M&M is out with its earnings, and it's a relatively strong quarter coming in with the net profit that has seen a surge of more than 17% right now. It's coming at 4,520 crore rupees. That's versus 3,840 crore rupees in the year gone by. That is the corresponding quarter in the year 2024. And if you take a look at the revenue, that's also up at 35,079 crore rupees. That's a huge uptick from 27,553 crore rupees that we saw in the same quarter last year. So yes, good set of numbers coming from M&M. And yes, net profit, like I said, that's also up more than 17%. So yes, a good set is what we are seeing from M&M. And it's above the estimates that we were penciling in for the quarter gone by as far as revenue is concerned. So yes, above estimates numbers for Mahindra and Mahindra. And let's also take a look at how the stock is reacting to the numbers. And it's gone up let me just tell you how the stock is doing. It's actually gone up well. In fact, it's trading at the highest point of the day following that strong set of earnings that we are seeing. And yes, as far as PAT and revenue are concerned, a beat coming up for Mahindra and Mahindra, but we'll get you more details. Time now to slip into another management conversation. But before that, right, so let me just take you through M&M's earnings. A very strong set is what we are witnessing. If we compare it with our preview, that is the 18-hour poll expectations, the revenue is, of course, a beat. We stand at 35,79 crore rupees. That's compared to a expectation of 33,832 crore rupees. As far as the EBITDA and as far as the profit is concerned, we've come in at 4,520 crore rupees for M&M. This is in comparison to 4,049 crore rupees. That's what the expectation was, and we have outperformed. M&M has managed to outperform, and it's coming at 4,520 crore rupees. That's a 17% uptick from the level that it saw in the same quarter, that is in FY25, the second quarter of FY25. So yes, strong set of numbers there. Stock too is reacting very positively. It's trading at the highest point of the day, and some of the key factors, the presser is just about to begin in some time, and some of the key factors that we'll be watching out for are the volumes and the auto segment margins. They were, like I said, expected to remain stable, and that's the result. What are the new launches coming up, and what's the outlook going forward for the second half of the fiscal? We'll watch out for that. But for now, we are joined by Ashwin Patil, who's the head of fundamentals research at LKP. Hi Ashwin, thank you so much for joining us in such a short notice as well. Your first thoughts about M&M's numbers across the board? It's been a beat.
Yes, the numbers have got quite strong as such, on a YY YY basis as well as QOQ, because we have seen clear surge in the numbers as such on the volume front on both the segments like SUV as well as the tractor front. And if you look at the numbers, also tractor is handsomely above what the management or what the industry was saying in the higher teens numbers. And in the month of September, with the GST reforms coming in the last week of September, solid uptick in the numbers of volume. So therefore, if you look at the quarterly numbers, this has led to a good fillip to the overall numbers. The net profits have surged about 18%, and at about 21%. EBITDAs are, margins are slightly up at about 18.44%. So it's a handsome number. And we believe that with the call happening today, the management will be raising the bar for all the guidance for their overall volume number for this year. So, that is one monitorable, and the stock will be definitely, the market will be giving a thumbs up to the stock going forward.
Right. Thank you, Ashwin, for that perspective. On that note, we'll let you go. But Srishti, you tracks the sector very closely for us. Srishti is here with us. Srishti, a very strong set of numbers. Looks like the festive cheer, really is reflecting in M&M's numbers.
Oh, well, indeed, and especially look at the margins that the company has reported, because this time around, the margins were expected to be just flat for M&M, but this time around, The company's margins, including the farm and the automotive division, has now stood out, and this time the company's margin stood at 18.4%. So that's a very good, strong set. The revenues have seen a surge of 21.3%. So across the board, it's been a beat on the M&M numbers. But let's also have a look at the management commentary as well, and especially in terms of the internals with respect to their market share. They say that the tractor market share has seen a jump of 50 basis points. That's good at 43%. The SUV's revenue market share has also seen a surge of 390 basis points at 25.7% this time around, while the electric three-wheeler market share has also gained some momentum. The company is also saying that the margins have definitely improved, and going ahead, they will continue to do better. In terms of their automotive divisions, the quarterly volumes have already seen a jump of 13%. In terms of the EBIT margins, I think that is something that the street was definitely penciling out for, and we'll watch out for the margin figure definitely. But Rajesh Jejurkar does mark that the auto standalone EBIT margin has improved 80 basis points to 10.3%, while the tractor EBIT margins has also improved to 20.6%, and that's a very strong set from both the auto as well as tractor EBIT margins. It's a good set by M&M.
Right, so a good set coming from M&M, healthy margin expansion as well. But now let's also put the spotlight on the banking major, PSU Bank SBI. That has also come out with its numbers, and it's largely a flat quarter, nearly, as we were expecting. The net interest income that has come in at 1,19,654 crore rupees. So that's the interest income that the company has reported. It has gone up about 1% on a sequential basis. I would just like to correct the numbers a little bit. We are seeing the net interest income coming in at 42,984 crore rupees. That's up about 3%. From the previous levels. PAT 2 has seen a growth of about 10%. So very strong numbers over there at that 20,159 crore rupees level. So yes, looks like a good set from SBI as well. And, Ashwin, I believe, is still with us. Actually, we have Gaurang Shah joining us from Geojit Investments. Hi, Gaurang. Thank you so much for joining us, so quickly on such a short notice. Your first take on the SBI's numbers. We were expecting a relatively soft quarter, but it looks like it's been better than what was the expectation.
I think profitability and margins have come in better than what the street had penciled in. A little bit of more clarity on the asset quality and provisioning, I think, will add to our confidence. Let me give a small disclosure. We do have a positive coverage on SBI from a long-term point of view on fundamental side, and this is from our research team. Our company, Geojit or I, we do not have any personal investments, no financial interest, no conflict of interest, but we give recommendations to our clients on similar lines. They might have their investment interest. And my understanding is that, like other PSU banks which have delivered numbers so far, all of them have delivered better than expected numbers. And I think State Bank of India, Bank of Baroda, and Indian Bank are possibly, trading or a little bit over their all-time highs. Understanding is that the credit demand is going to go up, which will help the loan book growth. Again, that will translate into interest income margins going up. Improvement in asset quality and provisionings coming back to the balance sheet will make the balance sheet even stronger.
Right. So that's the expectation. The balance sheet are likely going to be stronger in the quarters to come. We are also joined by Aditya Shah, the founder of Hercules Advisor. Hi, Aditya. Thank you so much for joining us. Your first take on the SBI, result. It looks like the profitability and margin, they have come in a lot better than what the street was estimating.
So from my perspective, the only thing that I look at is the asset quality. That's the number one thing that I look at when I analyze results. And the asset quality has improved sequentially as well as from a year-on-year basis. From a year-on-year basis, there has been an improvement from about 2.13% to about 1.73%. On a quarterly basis, from 1.83% to about 1.73%. So from an asset quality perspective, an improvement in asset quality at a time when unsecured and microfinance loans are facing severe problems, that bodes well for the bank. We need to look at the loan growth. We need to look at the deposit growth to further say how the result is. But from the first look, the results look really very good. Asset quality has improved, and steady result is what I can see on the first glance. I'm just waiting for the investor presentation But from my perspective, steady results, nothing to complain about as such.
Steady results, nothing much to complain about. But Aditya, now do you think, once the next leg of market rally begins again, financials and banking pack could participate? PSUs anyway have been doing well. So do you think this time PSUs could lead the charts for markets?
From my perspective, larger private sector banks are continuing to do well and they are leading the market higher. ICICI, HDFC, and for that matter, SBI also will continue to do well. From my perspective, I tend to favor SBI within the larger banking pack, which is HDFC, ICICI, Kotak, and then the Axis. Together, these 3-4 banks will continue to lead the market higher. The results are really very strong, and I expect SBI to build on this momentum over the period of next 2 to 4 quarters. Asset quality, if it remains really very good, SBI will do really well over the period of next 2 to 4 quarters, which I think will be the case.
So asset quality has improved for SBI. Gaurang sir, coming to you again, do you think this kind of impact is likely going to be seen in other banking majors as well once PSUs begin reporting their results? Other than SBI, do you think this kind of healthy credit growth and asset quality is what we are going to see for other banks as well?
So I think selective public sector banks amongst the large cap names and mid cap names should do well. Small cap public sector banks, there has been a historical problem. Out of the 4 quarters, you see 1 or 2 quarters good and the other quarters are run down in terms of performance. Again, disclosure, other than State Bank of India, we have a positive coverage on Bank of Baroda, Indian Bank, PNB, Bank of India and Canara Bank. So these are the names which we believe will continue to deliver, and my sense is that the difference or the gap between public and private sector bank is slowly narrowing down.
Right. I was just actually going to ask you that where you have said that it's narrowing. So what are your thoughts? How much narrower can it get as far as public sector and private sector banks are concerned? Something that I just asked Aditya, do you think PSU banks could lead the next leg of rally for the markets?
I think that it should be the case because we're already seeing the PSU index, bank index at an all-time high. Like I mentioned, some of the frontline names like State Bank of India, Indian Bank, Bank of Baroda are virtually trading to their all-time high or just tag above that. The fact of the matter is we expect the credit demand to come through and that should possibly improve the loan book growth going forward from here on.
Right. All right. Thank you, Gaurang and Aditya, for joining us today and weighing on the earnings for both M&M and SBI. Thank you so much. On that note, we'll let you go. All right. With that, it's time for a very quick break. We'll be right back with more